Right now, there is an important shift happening that every Iraqi dinar holder needs to understand clearly and without emotion. If you've been holding dinar for a long time, watching developments unfold and trying to separate facts from noise, today's update is meant to bring clarity, not confusion. What we're discussing here is not rumor-based speculation or exaggerated claims. Legal professionals are now providing clearer explanations about how certain dinar exchange situations may be handled under existing laws in 2026, including circumstances where taxes may not apply. This is not about avoiding obligations or exploiting loopholes. It's about understanding how the law is structured and how it applies to private currency holders when proper procedures are followed. For many years, fear has dominated the conversation. Holders worried about unexpected taxes, reporting mistakes, audits, penalties, or unknowingly violating regulations. That fear led many people to freeze, unsure of what to do or even how to prepare. Today's discussion is meant to replace that fear with understanding. By the end of this update, you should have a clearer picture of what legal experts are saying, how compliance actually works in real-world scenarios, and why preparation matters far more than timing. This is an educational conversation, not a promise of outcomes. For a long time, dinar holders existed in a cloud of uncertainty. Many acquired dinar believing it might one day increase in value, but very few understood what the legal and tax implications could look like if that scenario ever materialized. Questions around taxation, reporting requirements, and regulatory oversight caused confusion. Some assumed taxes would consume most of any gains. Others feared legal trouble simply for participating in an exchange. Over time, those assumptions hardened into beliefs, even though they were often based on incomplete or incorrect information. Legal professionals now explain that much of this fear came from misunderstanding how currency exchanges are treated under existing financial and tax frameworks. Not every exchange is classified the same way, and not every holder is treated identically under the law. Those distinctions are critical. In 2026, financial and legal experts emphasize that private individuals are not automatically taxed simply because they exchange currency. Tax outcomes depend on several factors, including how the currency was acquired, how it was held, how the exchange is executed, and whether established procedures are followed. This does not mean there are no rules. It means the system is more nuanced than many people believed. Legal professionals clarify that tax-free outcomes are not imaginary or illegal. They already exist within the law when specific conditions are met. These conditions typically include using authorized financial institutions, maintaining proper documentation, and clearly establishing the nature of the holding. Many dinar holders are private individuals rather than professional traders or financial institutions, and that difference matters. The law evaluates intent, behavior, and structure, not just the asset itself, how the dinar was acquired, how long it was held, and how it is exchanged all play a role in determining treatment. When these elements align properly, certain exchanges may not meet the legal definition of a taxable event. This is not about avoiding the law. It is about following it exactly as written. Legal experts consistently emphasize that transparency is the strongest form of protection. When transactions are processed through approved channels with clear records, the legal framework functions as intended. One of the most persistent misunderstandings in the dinar community has been the belief that all currency exchanges automatically trigger taxes. Legal professionals are clear that this is not accurate. Tax laws distinguish between income, capital activity, asset realization, and currency conversion. In some cases, a currency exchange is classified as a conversion rather than a profit-generating transaction. This distinction is where much confusion originated. Taxes are triggered by legal classification, not by assumptions or expectations. Another critical point experts emphasize is that reporting and taxation are not the same thing. A transaction may need to be reported without resulting in tax liability. Reporting is a disclosure requirement, not a penalty. This single misunderstanding has caused years of unnecessary anxiety among holders. Legal clarity now allows people to separate obligation from outcome and focus on compliance instead of fear. Authorized exchange channels are another major focus in professional guidance. Exchanges must be conducted through recognized banks or licensed financial institutions that follow regulatory standards. This is not optional. Using informal or unauthorized methods can change the legal nature of a transaction entirely. Even an exchange that could otherwise qualify for favorable treatment may face problems if handled improperly. This is why experts emphasize preparation over urgency. Rushing without understanding procedures often creates avoidable issues. Authorized institutions provide transaction records, verification, and documentation that protect the holder. These records become critical if questions ever arise. The legal system favors clarity, traceability, and openness. Proper handling is not about hiding activity. It is about doing everything within the established framework designed to manage currency exchanges responsibly. Documentation plays a central role in this process. Legal professionals consistently describe documentation as protection, not burden. Proof of ownership, purchase history, identification records, and transaction documentation establish legitimacy. Many long-term holders did not initially realize how important these records would become. In 2026, experts strongly advise organizing all relevant documentation before taking any action. This demonstrates lawful intent and responsible behavior. In scenarios where favorable treatment applies, documentation is what supports eligibility. International holders often worry that different rules automatically work against them. Legal experts explain that while jurisdictions vary, the foundational principles remain the same. Compliance, authorized institutions, and documentation apply regardless of location. International holders may face additional verification steps, but those steps exist to protect the system and the individual. When followed correctly, international holders are not excluded from lawful exchange scenarios or fair treatment. Geography alone does not determine outcome. Timing is another area where legal experts offer clarity. Many holders ask whether they should exchange immediately or wait. Professionals emphasize that timing should be based on readiness, not pressure. There is no legal advantage to acting before documentation and access are in place. In fact, acting prematurely can introduce unnecessary complications. The law does not reward haste, it rewards proper execution. Preparation reduces stress and prevents mistakes. Experts also address concerns about large holdings. Holding a significant amount of dinar does not automatically raise suspicion or change legal treatment. What matters is how the holdings were acquired and managed. Private holders are not treated the same as institutions or professional traders. The law recognizes this difference. Transparency and proper handling apply regardless of amount. One of the greatest benefits of increased legal clarity is peace of mind. For years, many holders operated under constant stress. Understanding the rules changes that experience. The law is not designed to punish private individuals acting lawfully. It is designed to regulate activity fairly. When rules are followed, protection increases rather than risk. Legal professionals also warn about misinformation. Claims on social media or anonymous forums often oversimplify complex issues. While lawful tax-free scenarios exist, they are conditional, not universal. Anyone claiming that all exchanges are automatically tax-free is misrepresenting reality. Accuracy matters more than excitement. Calm, informed decisions consistently outperform rushed reactions. Another important clarification is the difference between legality and ethics. Following authorized procedures protects both the individual and the financial system. Lawful behavior builds trust and stability. That trust reduces scrutiny and supports smoother processes over time. Responsible participation today strengthens the framework for future participants. Education remains a central theme in professional guidance. The more a holder understands the process, the less likely errors become. Knowledge empowers holders to ask informed questions and recognize unreliable information. Understanding reduces emotional decision-making and supports confidence grounded in facts rather than assumptions. While laws evolve, core principles remain consistent. Compliance documentation and authorized handling will always matter. Holders who focus on these fundamentals remain protected even as regulations adjust. Staying informed without becoming reactive is one of the strongest positions a holder can take. Legal clarity also contributes to broader stability. When rules are understood, fear-driven behavior decreases. Calm participation supports orderly processes. This benefits individuals and the system as a whole. As we close today's update, the message from legal professionals in 2026 is clear. Lawful dinar exchange scenarios that do not trigger taxes are real and legitimate when handled correctly. They are not automatic, but they are achievable. The path forward is not fear or urgency. It is understanding, preparation, and compliance. Staying organized, informed, and patient places you in the strongest possible position. This is not the end of the conversation, but it is an important step forward. Stay grounded, stay educated, and stay focused on clarity over noise.